SPACs, like many stocks, have been suffering from a consistent downwards pressure. But the thing about SPACs is that, according to the news, they're horrible, evil. Don't trust SPACs. So why the exponential growth? This is 2017. 18. In 2019, $13 billion were invested in SPACs. That's a lot of money. Wait. In 2020, the curve did like this. Exponential, baby. $80 billion were invested in 2020. And so far, in 2021, more than $90 billion. And I wonder, if they're so horrible, why are they growing so much? I don't get it. If anybody knows, let me know in the comments. Now let's discuss the truth about SPACs, because not everything is flowers and stars and beautiful. Who's making the real money? And what should you know before buying one so you don't get scammed? Let's talk about that. Is it risky to buy a SPAC? Yes, any investment is risky. If we're here, we already know that. Now in less than a minute, I will explain what a SPAC is and how it works. So if you already know that, you can skip to the next chapter. SPAC, special, purpose, acquisition, company, SPAC. Basically, it's an IPO for everyone. It starts as a blank check company where sponsors, people with ideas, reputation, and money, IPO their blank check, usually at $10, and we can buy it. But what are we buying? Essentially, nothing, just a ticker symbol. So I'm paying for 4 freaking letters. At the beginning, yes, but then the rumors begin, the media starts shooting at us with potential private companies to merge with, and they have 18 to 24 months to close the deal and merge. A little bit more than 50% of SPACs close the deal, and around 5% don't do it and return the money to the investors. So what's the benefit of investing in SPAC? What happens with regular IPOs is that private investors get super rich because they bought cheap. The IPO becomes news, there is craziness, it goes public, everybody buys on excitement, and they sell. But of course, sometimes there's a lockup period where insiders cannot sell before 90 to 180 days. Even so, they bought cheap, and we're gonna see how cheap they can buy. You won't believe it. Now with SPACs, we have the opportunity to buy before the official IPO. I am investing in SPACs, SBE before it became ChargePoint, DraftKings, and now CCIB. But the truth about SPACs is something that we should be aware of, because the more we know, the higher the probability of success. There are 2 main things you should check before buying a SPAC. Who's making the real money, and what should you know before buying one so you don't get scammed? Did you know that the sponsors or the management team can buy up to 20% of the whole outstanding shares at a ridiculous cheap price? If we're paying $10 per share and we think it's cheap, depending on the agreement, they might have been paying a penny per share. In theory, they get paid if the SPAC performs well. But these guys know what they're doing. So they're gonna get richer whether the merged company becomes a big success or not so much. We can check all these details in the SPAC's IPO prospectus. So we need to take a good look at the management team, who they are, experience in the sector, previous companies they work for, previous deal, investments, everything you can. If you can find their shoe size, you're definitely looking at the right file. Another important thing to consider is that during a regular IPO process, companies go through a lot of digging. So shady stuff can come to the surface and the IPO might not become a reality. The IPO through a SPAC is a bit easier. Less paperwork, less digging, so we have to be the ones to audit the target company. There's some good seeds and some bad seeds in the market, but at the end of the day, if the company is good, everything will be fine. See you next time.